Proper capital cost estimation is critical for a firm to make decision on capital budgeting. Generally, the cost of capital is the discount rate used to evaluate the desirability of the investment project. In the internal rate of return process, the project will be approved if the rate of return is higher than the cost of capital. Lastly, it is important to determine cost of capital because of making dividend decision. Cost of capital is a key aspect in the decision making of dividend. The dividend policy of a firm should be formulated on the basis of the essence of the firm, whether it is a growth firm, a standard firm, or a declining firm. However, the essence of the firm is calculated by comparing the internal rate of return and the cost of the firm, the normal firm and the declining firm respectively. Thank you.
Thank you, Amirul. Next, I will explain to all of you how to calculate the cost of equity for the Amazon competitors companies. First step, you need to find beta value. Beta can be found by using formula which is the asset beta times with the value of equity plus of debt and multiply with 1 minus tax rate, and the amount will be divided by value of equity. Then, by using the formula as shown in the slide, you can find the amount of cost of equity for each company. I will show you how to calculate the beta and cost of equity value for each company. The Microsoft got the beta amounted 0.9.
We're gonna calculate it and we're gonna use formula as shown in the question. E is the market value of equity. D is the market value of debt. RE is the required return on equity. RD is the cost of debt or the yield to maturity on existing debt. T is the applicable tax rate. The information for all of these can be get on the question. Only RE we're gonna calculate it, and we already calculated on the last question. So we're gonna look first on the first competitor, which is Costco Wholesale. WACC for Costco Wholesale is 5.05%. Next is Target. WACC for Target is 4.10%. Third is Alphabet. The answer for WACC Alphabet is 7.10%. Next is Microsoft. WACC for Microsoft gonna be 6.18%. Next is Netflix. 6.46% is the WACC for Netflix. Lastly, Etsy. WACC for Etsy is 6.83%.
Assalamualaikum warahmatullahi wabarakatuh. My name is Kuratu Aini Ashika. I would like to explain on the question 3, which sounds: if Amazon intends to make investment for the year 2021, which one of its competitors would look attractive and why, by considering the world's pandemic situation? Alright, I move to the answer. One of the attractive competitors for Amazon is Target. This is because Target have a lowest WACC, which is weighted average cost of capital among the 6 companies. The lower WACC indicates that the market value of the company will be higher. So, Amazon can increase their shareholder wealth due to the cost of debt is cheaper than the cost of equity. The lower WACC means the company are issuing bonds, which is debt, more than issuing stock, which is equity. Since interest rates are lower than the demanded rate of return on the stock. Not only that, the Amazon can reduce their cost of capital, which is the cost of financing a business, by managing the balance of debt and equity. A company must be able to generate more cash than they are paying to investors and shareholders. And thus, managers will base any decision on whether the return is greater than their WACC. Therefore, a lower weighted average cost of capital results in greater investment opportunities. Other than that, target also have a beta less than 1. That means the share is more stable in reactions towards share price against the market. Because of that, Amazon can gain benefit when investing in target during pandemic situation, since the share is still stable. Share price reacts better against the market, even though the economic growth is slow in movement and decreased than normal situation. Alright, that's all from me. Thank you.
I will pass to the next presenter, which is Aina.
We can determine the maximum capital expenditure by using formula total return earning divided by weightage of equity. By assuming the amount of its return earning is 10 billion USD and the weightage of